Indonesia and the EU sealed a major trade deal in Bali after nearly a decade of talks. The cepa, an investment protection agreement, follow EU pacts with Singapore and Vietnam. The deal cuts tariffs, eases trade and boosts investment in EVs, pharma and electronics. Trump's tariff push sped up negotiations.
Indonesia exports are expected to increase in key commodities such as palm oil, coffee, textile and apparel, fisheries, electronics, footwear and forestry products, including furniture.
The deal cuts import duties on 98.5% of EU goods to Indonesia, with steep tariffs like 50% on EU cars phased out over 5 years. In return, 90% of Indonesian exports, palm oil, coffee, textiles and more, get zero tariffs in the EU. Brussels says EU exporters will save 600 million euros yearly in duties. Jakarta expects trade to double in 5 years. European Commission President von der Leyen says the deal boosts jobs and secures key clean technology, minerals like nickel, copper, bauxite and tin.
Indonesia is only the European Union's fifth largest ASEAN trade partner. That means there is the huge untapped potential, which was confirmed to me by the representatives and CEOs of the businesses with whom we met in the morning in the event organized by Eurochambers.
The deal needs legal review and ratification, aiming to start by January 1st, 2027. By then, 80% of Indonesia's exports to the EU will be tariff-free. As Indonesia nears upper middle income status, some trade perks will shift. Indonesia's chief economic minister called it a milestone to ease tariff risks and boost supply chains for minerals, renewables and innovation. Talks with EU automakers on EVs are underway. The EU gains better access to key minerals. Palm oil tariffs will end, but non-tariff barriers like the delayed deforestation regulation remain a challenge. Diptanshu Kashyap's report for the Economic Brief, DD India.